Now, you don't need thousands and thousands of dollars to invest in stocks. You can pretty much start investing from the first dollar you save up. So whether you're left with $50, $100 or $1,000 every month after expenses, you can start saving in stocks. Now, here are some tips to most efficiently invest small amounts of money in the stock market and get good, safe returns. So the most important thing is taking that money you save up every month and putting it into the stock market. So investing consistently. Time in the market is more important than timing the market. So don't bother waiting for the perfect time or the perfect opportunity or the perfect company or news to come along. Just invest money consistently. That's statistically your best bet. Now, the best place to put your money, in my opinion, are cheap index funds and ETFs. These are broad baskets of stocks which represents a big part of the market. So it can be a global index fund, a US index fund, technology, low risk, high risk, you name it. But these funds gives you hundreds, maybe thousands of stocks in one. So they're greatly diversified and will give you good returns almost no matter what. They're also way cheaper than traditional mutual funds managed by a manager. And something that comes up in my comments section a lot is the actual dollar cost of the stock. So if you're saving $100 a month and you want to invest in a stock costing $150, you have to wait 2 months to buy one stock and you're still left with $50. Not very efficient, and your money is going to be sitting in the bank way too much, not doing anything. So try and find low share price for more efficient investing, right? So for example, if you want to buy Amazon stock, you have to save up $1,700. Now, even if you're putting aside $200-300 a month, it's going to take forever to buy that one Amazon share, while you might want to go with Apple, which is $170 a share, so you can buy almost 10 Apple shares to one Amazon share, therefore getting more time in the market and better returns. Even though, let's say, Amazon outperforms Apple, that doesn't matter because you're not going to own any Amazon shares until a year from now. So important to keep in mind. Same with index funds and ETFs. And some index funds and ETFs are commission free with certain brokers. So when you're looking up ETFs, make sure you check if they're commission free with your broker, whether it's Interactive Traders, E-Trade, Fidelity, whatever, TD Ameritrade. Try and find one which is commission free, because if you're investing small amounts of money, you know, maybe $50 a month, and you're investing every month, the fees are really going to add up. Even though you're just paying a couple of dollars in fee per transaction, it's really going to add up. So it's almost a must to find a commission-free ETF. Again, you have to look at it trying to invest as efficiently as possible, not necessarily investing in the best stock. So important to keep in mind. And I would personally throw in some blue chip growth stocks. These are your Apple, Google, you know, Lockheed Martin, Netflix, some, you know, Amazon, some big companies which are safe but also growing quite fast. Now, the most relevant ones today are mostly tech companies, but there are many other out there. I would personally not go with defensive, low growth, established companies. I don't think that's where the returns are going to be. And when you're picking individual stocks, you want to go for the growth, the capital appreciation rather than the dividend or the consistency. So this is all about picking the winner. Now, just to recap and give you some of my personal favorites, for ETFs we have VTI, IVV, VUG, VYM, SCHB, VT. These are mostly US, S&P 500, US growth, US dividend, US broad, and then a global ETF. You might also want to try and check out some Asia Pacific ones. As for blue chip stocks, some of my personal holdings and favorites are JP Morgan, Lockheed Martin, Boeing, Waste Management, Amazon, Apple and Alibaba, a little bit of everything, some banking, defense, aerospace, waste management, e-commerce, tech, e-commerce again, and so on. So don't be discouraged, just put all the money you can afford into stocks, get started today building your portfolio, and good luck.